Good morning, everybody. This is Pat Walker at Mission Winners. Hope everybody's well today. Hope everybody's healthy today. And that we're watching the stocks, so we're in control. We know about, all kinds of news that comes out, and it's important to know that news, all right? Announcements, Fed announcements, interest, CPI, things like this. These are important things to know. In fact, it's crucial. We don't need to become so tied into it that we're fixated on it. But these are reports, and you saw it today, that can have a profound impact on the market, either going up or going down. Now, let's think about this. Can't believe this. Hold on one second. Sorry about that, trader in Texas. So think about this. The CPI is going up. Inflation's picking up. It's showing a stronger economy. What does that mean? Normally that means earnings are going to be good. But here's the race. And it is literally a race. It's the race against rising corporate earnings and potentially rising interest rates. And they'll go neck and neck. Eventually, though, rising interest rates can cause a pullback in the market. I'm not saying crash or anything like that. I've been doing this a long time. But they don't want an overheated economy, all right? High inflation is not good, okay? So that's the way it works. And I also have to share this with everybody. I'm not getting political here. I'm not talking about, this administration's good, this administration's bad. We don't get wrapped up in all that stuff. We just observe what's going on and act accordingly. That'll really help us, all right? I just wanted to share that. So we know that news, and we've got a good list of stocks. Another very important point, and I can't stress this also, don't go heavy just before a huge report. That can it can catch you the wrong ways, folks. So there's metals and mining picking up. The economy's strong. Think about what groups are going to do well. I'll show you something here. What groups will do well? Well, bulk dry shipping. Shippers are doing well. The economy's doing well. You have to ship things. Starbucks, we're in it. It's just common sense. The economy's doing well. Well, how do you ship stuff? You don't walk at places. You need energy, like oil. Okay? You need oil. Here's another bulk shipper. Here's an energy stock. We own it down here. Here's another one, Halliburton. We own it here. Energy. If we connect these dots, there's Williams Company. When we connect these dots, we start seeing themes much faster. And this is the beautiful part. We don't have to memorize it. It's just common sense. Well, the economy's doing well. Well, let me think, all the stuff that's on the shelves at all the stores, it doesn't walk there. They have to ship it there. How do they ship it there? They have vehicles that use oil. There we go. Anyway, I just wanted to share that with you, trying to look at the big picture. Something else that's very important, please don't force trades. Focus on clean and simple bases. I said this a lot at the IBD meetups for 12 years. You can say, Patrick, why do you say that? Let's be very pragmatic. A clean and simple base, like this, right here. You've seen me post this before. Just a clean and simple shelf here. Just a clean and simple shelf right here. It does not need to be a cup and a handle. Just a clean and simple flat base. Why is that so important? It means other people see what we see. It increases the potential that if they see it, and they do, they'll buy also. Isn't that what we want? Definitely. And it's reflected in the charts. And when it pushes through, look at this. I'll show you something. I always said this at the meetups. People talk with their mouths and vote with their pocketbooks. Oh, it's just going sideways across this top. Guys, it's an elite group. It's got great numbers. Maybe it takes out that white line. That'd be good. Look at the volume pickup. On this bar, the stock did volume of 474,000 shares. 930,000. Double the previous bar. They voted. And that's what we want. We want to see those volumes surge. What does that indicate? Other people see what we see, and they're acting on it. If you can remember that, you'll be light years ahead of other people. And this is simple. This isn't some hocus pocus stuff. And I'll also take it a step further. This will make it easier for you too. And so, well, Pat, do I just look at the daily chart? Look at the daily chart, and as it's approaching the pivot, this is a great investing tactic, okay? As it's approaching the pivot or hitting that line, okay? That line is the pivot point. Look at volume on the hourly or 30-minute chart. Is there volume coming into it? Volume means, again, other people see what we see and they're acting on it. No volume, no buy. That's simple. I've got a limit alert going off here right now on NVIDIA. There we go. NVIDIA's right near these highs here. Picked up NVIDIA a couple of times through that line. I'll show you a great lesson here, folks. There you go. Look at the volume pickup there. That's what we're looking for. It looks great. Here's the daily chart again. NVIDIA is a maxless stock. All right. We love those. Now it's picking up a little bit. It's taking out yesterday's highs. Let's do the real world. By the way, this isn't rehearsed. I'm doing this real time. It's 9:36 Central Standard Time. So you're seeing this as it's happening. This isn't recorded that, oh, this is after the fact. No, it's right now. So here it is. What do? Take it to the 10-minute chart. There's no real volume coming into it. Okay, take it to 30-minute. There's really no volume coming into it. So we don't add more. We sit tight and wait. Okay, again, complementing our earlier statements, we like volume. There's something else to consider, and this is a great lesson, folks. Here's the daily chart. The green line is the 50-day moving average line. What's it doing? It's approaching the 50-day. Everybody knows about the 50-day. Everybody listening knows about the 50-day, all right? That can be resistance. By the way, it also lends itself a support. Right here, this bounced off the 50-day and rallied up, and then it finally lost the 50-day and rolled down. And where did it find its next support level? The 200-day. Just to get everybody up to speed, the purple line's the 200 simple. The green line is the 50-day simple. The blue line is the 21 exponential. And the yellow line is the 8-period exponential. These are what I use. I'm not telling you to use it, but they work for me, which leads to a very important point. Find what works for you, but make sure that if it works for you, it's simple, it's conceptually simple, that just not you, but other people can understand it. It increases the potential that they use it too. Don't. Years ago, I had a friend of mine said, Pat, I got a stock, man. Look at this. And he shows me, this is a guy, he was on the trade desk out west. I said, well, you think anybody knows about it? He goes, that's the best part. I don't think anybody knows about this pattern. He goes, this is going to be huge for us. And I said, well, Robert, if nobody knows about it, that means they won't see it, and nobody sees it, they won't act on it. He goes, oh, yeah. We want to find patterns that everybody sees. That's why, like Bill O'Neill talks about the cup and a handle. It's conceptually simple, and it conceptually makes sense. All right? BAC's picking up here a little bit. Here we go, real time. It's a little bit extended from this level. Okay? What do we do next? This is the real world. This is daily. Take it to hourly. Had good volume on that first hourly bar. Take it down to 30-minute. There you go. That's all I need right there. This is important. You can say, well, let's take it to 10. No, if the volume's good on hourly or 30-minute or daily, I don't need to look at the 10. It makes the cut already. There we go. That helps us. So just wanted to share that with you. I've got CF going off here. Agriculture. There we go. That's working. We're really big, and this is for everybody. And the VIPs are going to smile. They already know what I'm going to say. Focus on the leading groups. The vast majority of great stocks come from the top 40 groups. All right? You focus on that, and you will do much better. You say, I might miss something. We're trying to stack the odds in our favor. If a major portion of a stock price's movement is related to the industry group that it's in, why don't we focus on leading groups and then find the leading stocks in those groups? It works great. You know, I just have to share that with you. I'm going to see if I can find a little chart here. Hold on just a second. Bear with me. Dun, dun, dun.
Good morning, Pat.
Oh, these are the leading groups as of this morning. Okay, this is from MarketSmith. Great tool. Love it. I'm not trying to tell you to get it, nothing like that. It's a Bill O'Neill product. It's wonderful. I couldn't do this without it. But look at this. Do you see a theme here? Oil and gas, energy, oil and gas, oil and gas, oil and gas, media periodicals. They're probably writing that. Media periodicals, they're probably writing stories about energy stocks. Just kidding. That's dad humor, right? Oil, my kids, if they were listening, would shake their head and go, here he goes. Oil and gas, oil and gas. Shipping, chemicals, agri. You see the theme there? There's an energy theme there, right? Oh, shipping? See shipping in there? Yeah, there's Starbuck containers. That's just putting all the pieces of the puzzle together, and that helps us. Anyway, I just wanted to share that with you. My goal is to speed up the learning curve, speed up the trial and error stuff. Oh, gosh, maybe I should try this. Maybe I should try this. No, I'm going to say this too, and this is important. Just things that hit me. Be careful. Google. Be careful buying before a big economic report. Okay, you saw what happened this morning. It's good we're recovering. That's it. There's NVIDIA lifting. We want to cross this top. Let's do the real world. Here's NVIDIA. You can say, oh, okay, I can see that shelf there. Here's the hourly. See that hourly shelf? See the volume pickup through that shelf? Take it down to 30-minute if you want. Here's the 30-minute. It's going sideways. That's the same line, by the way. Okay, it's the same line on the daily as it is, it's just transposed. See that volume pickup through there? Look at that. Watch this. You'll love this. I'm like a kid in a candy store. Going sideways. All right. You say, oh, those are pretty clean tops on the daily, and it looks pretty good on the 30-minute. I guess if it takes out that white line with volume, that'd be pretty good. Boom. Right there. Look at the volume pickup. What do? We bought. There you go. That simple. That's simple. You know what I love about it? A, it's simple, so everybody can identify with it. B, price is good above the line and bad below. We don't give it 7 or 8 or 10%. It's good above the line and bad below. Just let her work, see what happens. And that really, really helps us. Now, let's take it a step further. And this is for everybody, all right? Why would we be hesitant? Would we take an initial position here? No. Why would we be hesitant to add more? We've already added. We added yesterday. Why would we be hesitant to add more? What's it doing? It's approaching the green line. That's the 50-day moving average, all right? Everybody knows about the 50-day. Got to be aware of that, all right? Can't stress that enough. Anyway, I just wanted to point a few things out to you. Let's just take a look at what's going on.
Hey, good morning,
First,
Pat.
I'll start with the Dow. Now, I need to share this with all of you too. The Dow is 30 stocks. It's price weighted. I put it up here as a service, but I don't really, I'm not hung up on it, all right, for making decisions. It's 30 stocks. S&P 500, it's 500 stocks. It's more relevant to our situation. I love the NASDAQ comp to see what it's doing, but note this. The spiders are above the 200-day, right? QLD, I'll just pick that one. It's below the 200-day, the purple line. See the difference? QLD, SSO. Above the 200-day, below the 200-day. Which one do we own? We go where strength is. We own this one. We're picking it up in here. Okay? That simple. And in here. There we go. That simple. Look for strength, and you will do much better. Bottom fishers, it's very tough because we don't know where the bottom is. Have to share that. So let's do something here. Let's see what's going on with, you'll like this. See how I have this organized? I just want to share this with you. This is a great tactic when I talk about what's going on with things. I like to organize by industry leading groups, okay? What's really strong? Oil. See the oil tab? Now, I'll tell you this. Last year, I didn't have an oil tab because oil wasn't doing anything, but it is now. Here they are. What do you see there? Green. What does that tell you? He's on autopilot now. Alcatraz, there you go, buddy. Let's see here. Okay. Paul, if you got anything, ramble, buddy. Or we can do it, this is this for everybody. We can wait, do it afterwards because this isn't just for our team. So here's oil. Yeah, we'll wait on that. Okay? Here we go. Energy. What does that tell you? Energy's strong. Let's go to the max list. Here's the ETFs. What do you see on ETFs? Well, you can say, well, I can sort this by quote sort up percent and instantly see where the themes are. I encourage you, take this ETF list, you see that page called ETF, and sort it by quote sort up percent a couple times during the day. You can instantly see where there's strength, but also where there's weakness. And that helps us. Max list, here they are. These are the big name go-to stocks. All right? Now, a lot of people talk about, and this is going to be important, it might hit a nerve with people, but that's not my point. A lot of people say, oh, it's a great company. I'm just going to own it. Okay, I'm just going to own it. Please, a lot of people that say that, maybe they had the great luck of buying and skill of buying at the right time. If you're not getting it way down in a trough or something, you could get in trouble. You can say, well, can you show me? Yeah, I'll show you. Look at this. Look at this beautiful long base on Netflix. Look at that. And it lifts through here and it starts to go. We bought this. All right? And we ran this. And know this. This, please do not think, oh, this is a case of Pat, is trying to. Yeah, I don't hear anything here, good buddy.
Hey, Pat.
Yeah, my speakers are on. I don't hear anybody talking. Anyway,
Oh, and I don't
it's
think he
lifting
hears
up
me.
here. And everybody, we bought this. All right. Last year, did this when I was in Colorado, as a matter of fact, I think. Up in the mountains. Lifting off, running. Okay. You say, well, we'll stay with it. You sell some into strength. Okay. And then it lifts again. Okay. You buy more. So, but we own it down here, okay, at around 550. All right, 555. Is this beautiful? Look at this. Starts to run, we just take it. Then it starts to get toppy here and lose the 21 day, then it loses the 50 day. You see this bar right here? You see the selling on that bar? I'm gonna make this bigger for everybody. This is a great lesson. This is the real world. This isn't textbook, okay? We owned this, all right? Our members owned it. That is a good run. Finally loses the 50 day. Look at the volume pickup. That was it. Adios, we're done.
Hey, Pat, can
And
you
then
hear
it
me?
does this. And then it does this. I mean, folks, this is nothing but wicked, okay? This would, can you imagine? You bought the stock in here, we'll say 550, 560, okay? 550, 560, 570. And today, it's trading here at 400? No, this is why we have rules and tactics to manage it. Hold on one second, please.
Hey, Pat, top of the morning.
Hey, Owen,
you
your
can't hear,
mic is live.
can't hear Paul, and you can't hear me either. Well, let's take a look. You mind if I razz in real quick?
Hey, Owen, you might want to mute your mic.
Okay, team, I apologize. We're checking something. We're trying to get a couple questions answered. VIPs are asking us questions, and Paul is a man who does a great job of, hey, Pat, one of our guys, our gals, is asking about whatever. Hey, can you look at it? And I do that for them. So we're checking right now to find out what's going on. So I apologize for that, but we'll continue on as Owen is in there working on it. And I'm going to do something real quick. Hold on a second, Owen, if I can. Bear with me, and I'll give it back to you. All right, you take that mouse, go for it. So I'll continue onwards. Another very important point. Focus again, please, on clean and simple base breakouts, like Apple is, right? You can see it on the chart, the buys. Run that and you'll do much better. We're going to quantify the statement though. I'll say it again. The vast majority of leading stocks come from leading groups. This is research from Bill O'Neill and Company. We use it to our advantage, I guess would be a good word. We'll focus on that. And team, here's the key point. You just take a look right here. Look at the theme. What do you see here in the theme? What do you see? You see energy. You see energy. You see bulk shipping. You know, I taught baseball years ago, coached baseball, and a young man who used to periodically practice with us, I thought this was kind of cool. It's a guy named Max Scherzer. How about that? And I think he did. Honing our skill set, turning off the noise. If the vast majority of stocks come from the top 40 groups, why don't we stack the deck in the favor and look at the top 40 groups? If the vast majority of stocks that make huge moves have earnings up 40% or higher, or have sales up on average 40% or higher for 2 quarters, and they're all within 20% of 52-week highs, and they all have a composite rating of over 90, and they all have an accumulation distribution of A or B, and they're all over the 50-day, folks, what I just gave you, that's $1 million sentence right there. Of course, it was a run-on sentence. My teachers would be upset if I did that in school. Anyway, you get my point. What? And then you can say, why are you so driven with this? For those that don't know, I was a sole supporter of a family of 6. We had 4 kids in private schools at the same time. I had to make money. I didn't have a choice. Stay-at-home wife who did a great job raising 4 kids. Thankful for that. And by the way, when I say that, yeah, I was involved too. I don't want you to think no, we were both actively involved parents. But the idea of having to do it, realizing I've got to get this right, I got to make it happen. And some of you, I know this. This is one of the biggest reasons Owen and I started Mission Winners is, gosh, when I was doing the IBD meetups, so many people would come up afterwards. Man, I'm having a problem with this. I can't get this. I don't know what to do with this. Hey, I got a big loss. What should I do? What did I do wrong, Pat? Help me. I got these questions so often. And finally said, you know what? Here's what I need to do. Owen and I talked. I said, we should start a service where we can help people. And that's a big reason why we did Mission Winners. Also, and this is for everybody, it's therapy because it helps me get over being shy. Okay, just teasing there. Sorry about that. Little bit of fun too. Are we hooked up, Owen? Is it working?
Can you hear me through your speakers now?
Yes, I can.
All right.
We're
Paul,
set?
give it a
Pat,
shot.
can
Paul.
you hear me?
Paul, I hear you, buddy.
Hey,
Thank
we
you.
might be in business.
This is sweet potato pie right here. The joys of modern technology. Owen, thank you. Paul, thank you.
Yep, I'm gonna hang up the phone now.
Appreciate it, buddy.
Okay.
Okay. We get questions from our VIPs during the day, and we've got a veteran VIP who I've known, who is a wizard. His name is Paul. I'm not going to give you his last name, but here's his telephone number. No, just kidding. Years ago when we moved to a house out west, Paul was the man that built everything up for me and got the computers all working. So Paul's awesome. Great guy.
Hey,
Sharp,
I had
knows his
the, I had
stuff
the
and-
manual from your buddy Tommy Edison.
That's Tom was great. I'm telling you what. And Al Bell, we did some great stuff together. We
Hey,
were on a
Pat,
first
when
name
you're-
basis.
Pat, when
Anyway,
you're ready, we've got a few questions stacked up here.
well, let's rock and roll. I'm ready, Paul. Thanks
All
for
right.
your help.
I'm going to go back to Tony. Had the first one. Her question was, Pat, regarding add-ons. Are add-ons always 20%, or can they be 30% or higher?
Great question. Yes, they can be higher. In the strictest sense, and this is CANSEM level 3 and 4, and I've been there and I got the manuals. Here's the way it works. And by the way, it's great stuff. Okay, it's changed my life. Bill O'Neill changed my life, I'll just tell you. So credit where credit's due. And what a nice guy, too. Got to sit down with him and all that stuff, have lunch. Anyway, if it's a great market, and the market's not great right now, if it's a great market, and it's a leading stock and a leading group, and it has a clean and simple base, your first buy and your goal, let's quantify the statements, okay? This is my math background. Let's not just do percentages, let's talk shares so you can identify with this. Your goal is to get to 100 shares, all right? That's going to be your full position. Your first purchase, if it's a good market and it's a clean and simple base breakout, it meets all the constraints, your first purchase would be 50 shares, 50%, 50 shares. Your goal is to get to 100 shares. The stock advances a couple of percent, your next purchase would be 30 shares or 30% of 100. Continues moving up, your next purchase is 20 shares or 20%. 50 shares, 30 shares, 20 shares. Only Only if it advances do you buy more shares. If it does not advance, you only own the 50 shares. That will keep you in the right line all the time. Now, I have to be really specific here, all right? I'm talking about buying, getting up to 100 shares total. So transpose that. If your goal is to get up to 1,000 shares, your first purchase would be 500. Your second purchase would be 300, and your third purchase would be 200 shares. And if it doesn't advance, you only have the 500 shares. Another very important point that we really talk a lot about at Mission Winners is clean and simple base breakouts. Focus on clean and simple base breakouts. You will do, and you can see this started to fall. You know what it did? We sold some off. It's that simple. Apache, CF right there. Clean and simple. CTVA. I mean, these are all DAC right here and right here. Clean and simple. EOG right there. Look at that. Look at the volume pickup. Focus on those multi-week bases, and you will dramatically improve your potential of making money. And here's the other important point. This is what I love. And again, you know my background. I couldn't lose a bunch of money, folks. All right. Clean and simple. Price is good above the line and bad below. That's all. Oh, and this also leads to another point, and this is for everybody. Things I wish somebody had told me years ago. Hey, Pat, quit looking at the 5-minute charts, buddy. Stop it. You're sabotaging yourself. So I don't. Now, if you're day trading and using the 5-minute charts and they're working for you, that's fine. I'm not a day trader. I'm not a scalper. I'm not in it. Like there were people that bought this breakout right here and they're up $2 and they're going, man, this is awesome. I'm up $2 in a day. I'm selling. Yeah. Okay. Go for it. And miss another 20 or 30 points. I don't want to do that. 20 points. I'll be specific. So anyway, there we go. I hope that helps. Let's do another one, Paul. This is good.
Okay, Pat. Yeah, we got quite a few questions here. So this next question, just for time reference, was about 20-ish minutes ago.
Okay.
So you can look at the appropriate place on the chart. Tesla, volume coming in. So about 20 minutes ago on the chart is where
Great
the reference
job.
was.
Thank you. Here's the daily chart. Y'all see that clean and simple shelf? All right. Take it down to 30-minute. And what do you see? Runs up and forms a tail bar. Look at this bar, 30-minute. It gaps up, it runs up. This is yesterday. Runs up near that line and tails off. Today, it starts to pick up. It runs up, did not pierce the top of here or that line, and it's already tailed off again. What does that tell us? It tells us there's a seller there. Okay, here's the hourly chart. Look at this. Runs up and tails off. Seller's up there. Gaps up, runs up, and tails off. There's a seller there. What's it need to do? Needs to get across, and I'll draw this, I'll continue it. This is a good question. That's close enough. Needs to get above that white line, and it needs to do it with volume, and we need a good market too. So, you know what's great about that? By the way, there's no such thing as a bad question. So team, never be afraid to ask a question. I'm not kidding, all right? There could be bad answers, no bad questions. Clean and simple tops. Needs to push above there with volume. But it does tell us with this tail bar right here and this tail bar, what does that tell us? That every time it runs up there, it's met with selling. There's sellers up there. There you go, Steve. Yeah, it's got another tail right now. Good eyes. Yep. There we go. Should we do another one, Paul? I'm ready to roll, buddy.
Oh yeah, we got a bunch of them. So this one will involve XLNX and NVIDIA.
Okay, here we go.
All right. So the question is, well, you're pulling those up. The question is XLNX a better option than NVIDIA? Seems to be leading the sector.
Good question. First off, and this is important, I've got it on a note and it's kind of marked up, so I'll get rid of these lines right here, okay? Advanced Micro Devices is buying Xilinx, okay? Please know that. Please. I do not buy stocks that are being bought by another company. Why? And this is not a criticism of Xilinx. This is not a criticism of Advanced Micro Devices. It's just simply the risk is high. If something happens and they pull the deal, which does happen, the stock could gap right back down. So they're being bought. I don't buy buyout stocks. I wait until after the deal's done and then I'll look at it. Just that simple. Because I've seen the other side of it where something happens, the offer's withdrawn and the stock drops. There we go. By the way, here's Advanced Micro Devices, and it started to push through yesterday, but no power yet. And notice something. This is a great lesson. Where did it stop? Right at the 50-day. How about that? Has Advanced Micro Devices been good? You know, we talk about clean and simple base breakouts. See that clean and simple base right here? See that? Oh, and it pushes through right here. We'll call it 117 up to 160. That's good money. Loses that trend line right here, shares sold. Loses the 21-day right there, the last shares were sold. Done. Took the money and ran, and it's good we did. There you go. I love, by the way, this is a great lesson. I love clean and simple base breakouts. Right there, look at this one. This is what you call sweet potato pie. Look at that. Right there. When this broke out here, earnings were up 78% and sales were up 54%. Make this a little bigger for you. Look at the volume surge there, folks. I'll train your eyes for this, okay? Good questions, by the way. It's just going sideways, kind of forming a cup and a handle. Make it a little bit bigger so you can see the bars. Clean tops. You know, if it takes out that white line, that's fine. Nothing fancy. Okay, there's nothing going on there. Oh, look at that. Look at the volume surge. People talk with their mouths and vote with their pocketbooks. Folks, they voted on this bar. The stock did 50. The volume on this bar was 69 million, 141 million shares. Double. They voted. And they voted. And they voted. That's beautiful. That's good run. That's a good run. That's what we look for. There you go. We'll make it bigger again. I try to make the charts big enough for everybody so that you can discern the bars. I need to discuss something with everybody. This will really help you. A lot of people don't do this, and I used to teach this at the meetups. Every price and volume bar talks, and it's important to look at the open, the high, the low, and the close. This bar closed near the lows. It was met with selling pressure. All right? Be aware of that. What's the trend right here? The trend is down. Until it starts to lift, you just have to wait. There we go. All right, Paul, let's do, I know we got a bunch here. I don't want to talk too long about it. Let's do some more. This is fun.
All right. If you got a pencil and paper, you might want to just note these four. Steve 129 was commenting that BAC, XME, NUE, and FCX are very strong this morning, with XME and NUE approaching multi-year highs. So that was BAC, XME, NU, and FCX.
NUE? Probably Nucor?
Yes.
Okay, very good. See, that's good. There's a theme with a couple of these, okay? Here's BAC. Financials are acting pretty good. See this deep cup right here? It's a deep V cup. What does it need? It needs real price and volume move through these tops right here. And I'm going to draw the line for everybody. Good question, Steve. There you go. What's it need to do? It needs to push above that line on really heavy volume. What's one slight negative in the chart? It's a V cup. V cups indicate higher investor emotions. What's the best thing this stock could do? And this is the real world for everybody. Love these questions. You got a V cup? It would be great if it could go sideways, form a little handle right here, all right, to get rid of the last of the sellers, people that bought it here that got stuck, people that bought it down here and it's back near old highs and they sell. Get rid of the last of the sellers, and then it takes off. There you go. Should we look at NUE real quick, Paul?
Sure.
Okay. Here we go. Here we are. All right. By the way, what group is this? Steel. It's in a leading group. All right. What's it doing? I'm going to refresh this real quick. Bear with me. Ran up, goes up. They take it right back down. Maybe it was earnings. I don't know. They take it right back down. This is a V shape. V shape patterns have a higher failure rate than a rounding cup. All right. Has a lot to do with investor emotions. Anyway, what's the best thing this could do? It lifted across a little level right here, and I'll draw this for you. flipped it across a little level right there, and it did it on pickup and volume. It's in a good group, and it's picking up. What would be a good thing it would do now? It's made a fast move up here. The best thing it could do, and I don't know if it will, if it could form a little handle here. Kind of go sideways for about a week to digest these gains. Get rid of some sellers that bought down here and want to lock in profits. It pulls back a nice orderly handle, and it does it on decreasing volume, and then it lifts off across that handle. That's a clear zone for more. There we go. All right, let's see here. What do we got? FCX, should we do that one real quick, Paul?
Yeah, that would, let's make that the last one.
Hey, buddy. Thank you. Here we go. FCX. This is another V shape. Up, down on heavy volume. Rallying up on decreasing volume. A little bit more of a riskier setup. And here's something interesting. Yes, it's lifting. I wouldn't buy it up here. Okay, I'll tell you that now. Pushing through the 50-day, see the volume pick up? That could have been a potential buy, but it's aggressive. Here's the weekly chart. Down on heavy volume, rallying on steadily decreasing volume. Go back to the daily. Lift off here. I would not buy it up here. If you bought it here, okay, pushing through the 50-day, you could sell a little bit. Why? Because it's rallying up to the old highs. It's going to be met with sellers. And what would be nice? And again, this is a V shape. V shapes are riskier than rounding bottoms. Be nice if this could form a little handle here and then take off. We'll watch and see. I wouldn't buy it up here. If you own it, you could sell a little bit into strength. You could say, Patrick, quantify the statement. Sell 20% of your shares. You're guaranteed a profit then. If you bought it down lower, it could fall all the way to your price and you sell the rest for break even and you still made money. Knowing that, it minimizes stress, which leads to better decision making. Sim is still working. Good. All righty, Paul, should we do some more?
Okay, yes. The next question from Pat O, and this is regarding earnings and how you should handle earnings if you're holding a stock. Let me go ahead and just read the question for you. Pat, would love to hear your approach on earnings. CF earnings is coming up after market hours on Tuesday the 15th. I'm checking that just to verify it. I do have around 20% cushion from much earlier. Past Q figures seem very good. Would appreciate your advice.
Great question. First off, good job. Good job. You did your homework. I like that. It's lifting. That's nice. It has earnings coming. Okay. We don't know what they're going to be. More importantly, we don't know what the response to those numbers will be. If I will never take a full position into earnings, I will always sell 20%. It guarantees that the profit on those shares. It also controls risk in case it gaps down. That's from years of doing it, decades of doing this, and getting hit on a few stocks. I mean, I know what it's like. Hey, I know what it's like to have a stock gap down 100 to 200 points on you folks on a $500 or $600 stock. It's not a lot of fun. With a full position, it's not a lot of fun, okay? It messes with us financially, but it also messes with us psychologically. There's two types of assets in the market. There's financial and there's emotional. And I can't stress this enough. You got to protect both of them, folks. By selling a little bit into strength, you're guaranteeing yourself a profit. You're controlling risk. If it drops down, you can sell the rest and you still made money. If it gaps up, you're still in some. It's the best of both worlds. Okay? And again, that's from a guy who had 4 kids and a wife, stay-at-home wife, that was trying to make money, and it was my only source of income was investing profits, nothing else. I wasn't a broker, I wasn't an advisor, I was just Pat Walker trying to make it happen. So, and I'm thankful for that. I'm not bragging, I'm just thankful. So let's do another one, Paul. This is kind of fun. I'm getting out of it. Paul, do you think I'm getting over my shyness with all this?
Well, we're getting there. I think there's hope.
This is therapy for me.
Okay, I'm going to go back and just double check. This is actually a question from Twitter, and it was for Owen. I'm not sure if we can go ahead and proceed with that, or if you want to move on to another one.
Yeah, if it's for Owen, it's probably a tech question.
No, it's definitely not a tech question.
Oh, okay.
I'll go ahead and send it over to Owen so he can catch it. We'll move on.
Okay, sounds good. Thank you, sir.
All right, Steve 129. There's a tail bar on SPY hourly, and that was at 9:52 when he posted that.
Yep, I see it right there. Ran up. This is a tail bar here, and then this is a tail bar here. Let's take it to 30-minute and take a look at it. You can see the tail bar is better. See that tail bar there, folks? Gaps down, closes up. That's a good bar. This bar, gaps down just a hair, runs up, closes down. That's a negative bar. Now let's take it a step further. What's positive about this bar? Combined price and volume. Price action's sloppy, but volume dropped off. Okay, that is a plus, combining price and volume. Now, you've got a low on this bar. If it starts rolling down, that's a red flag to be more cautious. If you own SPY or with other stocks too. I also need to share this. This is important. We can look at this, and what's going to be an arbiter on our stocks is the individual stock. Okay, what the individual stock is doing, not the spiders, not the S&P 500. That's the broad brushstroke. Then we take a look at the stock itself to make a better decision. Like this is still going up. There's another very important point coinciding, complementing all this. I encourage all of you, VIPs and people out on Twitter and stuff like this, don't force stuff. It's easy to make money when the wind is at your back. Okay, don't think that, oh, the market's open, I have to do something. No, you know what we have to do? We have to practice good investing tactics and discipline and emotions. That's what we have to do. A lot of people, oh, the market's open, let's go, let's go, let's go. You can make more money with less stress and less hassle when things are working for you, when the wind's at your back. And I'm telling you, honest to goodness, I wish somebody would have said that to me 20 plus years ago. Hey, back up here, buddy. Wait. Don't force trades. Don't force it. Okay? When it's clean and simple, they just go. I mean, they take off. I mean, this is probably one of the better ones. Right there. It just goes. We love that. This leading group. Look at that. Look at the volume. And it just goes. No hassle. Walking up the 8. There we are. All right, let's do another one, Paul. Sorry if I'm going on. By the way, and this is for everybody, I'll say it again. I take your questions very seriously. I ain't going to give flippant answers here. So if my answer is a little longer, it's because I want to do it justice. You know, somebody asks a serious question. Oh, that's fine. Let it go. Come on, Pat. Give me more. So that's what I'm doing. Go ahead, buddy.
All right. Next question is, and I'm sorry, I'm getting caught back up to my list.
Good job.
I'm reading ahead and trying to post some things from Twitter. So Alcatraz asks, what should Facebook bag holders do now?
Okay, let's take a look at it real quick. Facebook right here. Okay. Can you read that question again? I want to make sure I get it right, please, Paul.
Yeah. I think basically what he's asking is, if you're holding Facebook, what should you do now?
Oh, okay. Good. Thank you. This is a great question. You know what's great about this question, folks? It's the real world. It's not textbook stuff. All right? You own Facebook, and I'm sure some of you listening right now own this stock. All right? Number one, and this is something important, be very careful carrying a full position into earnings. I've said this before. I say this probably every Discord meeting. Please be very careful holding through into earnings. Also, right here, when this was doing this, it was below the 200-day. I have a philosophy. I rarely will own stocks below the 50-day, especially a falling 50-day, and below the 200-day. I just leave them alone. This sounds like a corny phrase, but it's the honest to God truth. The air is better above the rising 50-day, and the air is better above the 200-day. Okay? So Focus on that. Say, yep, you know what? This ain't working. I don't give a rip what the number, it'll be all right. You don't know that. So far, smart money, big money, saying it's not going to be good. By the way, this bar right here, just before earnings, it gapped up and it faded off. It ran up to the falling 50-day and it's below the 200-day, and it did it on volume. There was some selling pressures there. Got to be careful with that. It's below those moving averages. I had a broker I worked with years ago, and this is what he said to me. He used to say, you know what you do? You get livable. You get livable. He was an old, wise man. And that's what I would always do with my managed accounts is get livable before earnings. I'll never take a stock that I'm down big into earnings. I just get out. Keep losses very small, very small. This is why I come back to clean and simple base breakouts. Price is good above the line and bad below. So you own this, all right? And then it does this. Here's what it's doing now. It's chopping around. My suggestion for now, if you didn't sell some and get livable, because it will eat you up psychologically and financially. It'll chew you up. I know, because I've been there. I know what it's like to be down hundreds of points in a stock. It's not good. So how many points? 200 points on a $600 stock years ago. There you go, decades ago. So sell some off. Watch and see if it bases. Give it time. It's very aggressive, very aggressive. By selling a little bit, you'll be able to rest. You'll be able to think clear. You can say, yeah, but what if it comes back? It will form a base, and you will be able to find an entry, and you could buy those shares back if you want to. But please get livable on stocks like this. This is bad. There's another reason why. This was bad news on earnings. Please be careful coming into the next earnings report in about 2.5 months. Please be careful. So I know I talked a little long on this, but this is serious. This is serious. This is the stuff. It can hurt us financially, but it can also hurt us psychologically and lead to what's called the freeze, which leads to a point that I'll share with all of you. A great book is Market Wizards by Jack Schwager, and the last chapter by Dr. Van Tharp will really, really help you when it comes to investing. Mindset. The most important asset we have is not our financial capital, it's what's going on mentally with us. We need to protect that too. And there's nothing in it for me, okay? But it is a great book, Market Wizards by Jack Schwager, and the interview with Dr. Van Tharp is the last chapter, THARP. I've read it countless times. Anyway, I got to share that with you. All right, should we do another one, good buddy?
Yes, this is one that I put in, and again, we're running about 25 minutes behind on the questions, just so you can frame up the
Okay,
observation.
we'll go faster. Sounds good, Paul. Thanks
That's
for the
okay.
input.
No, Pat, again, it's just so that you can frame the question up on the chart is the only reason why I'm mentioning that.
Appreciate it,
Pat,
good buddy.
can you speak about the second or third reaction to news? Might be appropriate this morning.
Good question. Yes. There's normally, and this is a statistical fact, there's normally 3 reactions to the news on a stock, on earnings. We'll call it on earnings. The gap up, we'll call it a gap up. It will pull back a little bit, and you can see it either on the daily chart, maybe the hourly chart, or the 30-minute chart. You'll see it pull back a little bit. That's the second reaction. And then it turns and starts to go back up. That's the third reaction. The third reaction is frequently viable, okay? The third reaction. But I stress, let's talk about it's on a gap up. And so you start to buy it. It's extended in price on a gap up, right? How can we control risk? Buy less shares. People always think that good investing is always buying the same number of shares. No, it is not. We can control risk by share size, all right? Buy less shares on lower probability setups. Buy more shares on higher probability setups. And it's what we teach all the time. What the heck to look for? Anyway, there we go. There's Alcoa lifting. By the way, Alcoa, is it in a leading group? Yes. There you go. Okay, Paul, let's do another one, buddy.
Okay, Steve had a comment. I'm not sure I understand it. 11 11 Eastern European markets close. Maybe Steve, you can elaborate on that just a little bit, unless you've got it, Pat.
Could you state the question again, please?
11 Eastern European markets close. I'm just going to ask Steve if he can restate that. I'll look for his question.
Okay, sounds good. You know what it
So
might mean? Their markets are closing. The
not
European
sure.
markets are closing. I don't know.
I'll ask Steve to clarify that.
Okay, buddy.
Um,
Sounds good.
So Steve also said that there's a possible green to red on financials, a green to red shift on financials.
Well, how can we find that real quick? This is a great question. How can we find it real quick? Tell you a great way, just with the ETFs, go to XLF. Here it is. Yeah, financials, they're hanging in. That's good to see. I can see where it's just, it's just chopping here. It's a little bit extended. There's no clean entry at this point in time, but they're hanging in there. This is also good. When the financials are acting okay, it normally is a floor for the markets. All right? Another point for all of you. It's not the news, it's the reaction to the news that counts. So we'll see what happens with the CPI news and everything like this. Fed news. All right? All right, Paul, let's do another one, buddy.
Okay, just let me scroll back up here.
Thank you for your help, by the way, sir.
Oh, very, very glad to help. This one's from YouTube. Do you place limit orders?
Rarely, no. And there's a reason why. You want to buy a stock, okay? You put in a limit, it pushes through your limit, and it never gets filled. You defeated your purpose of owning it. You want to sell a stock, and we'll say it's dropping, and you put in a limit, and it falls through the limit, and you never get filled. You defeated your purpose. So I haven't used a limit order. I don't know if I've limited. I know I haven't used it this last, I don't think I've used a limit order this century, to tell you the truth. I don't mean that in a cute way. I've just found that it defeats the purpose. It just defeats the purpose of trying to get in or out of a stock. So, and here's the beautiful thing, folks. Hey, years ago, and some of you are going to smile, some of you that are listening, years ago, these NASDAQ stocks, these suckers used to trade with a 3/4 to a 1-point spread. Most of them. Fire, they're so tight now. Look at this. Look at Starbucks trading with a 4-cent spread. So it's easy to glide in, it's easy to glide out. There you go. So limits, I'd be careful with that. Especially if it's dropping against you. Limit the loss. So, and it's starting to run, and you go in at limit, and you never get filled, and it keeps going. That's maddening. So, go in and just buy less shares to control risk. All righty, good buddy.
Okay, Pat, the next question is regarding the standard CanSlim 50-30-20 scaling on a stock.
Yep.
But I'm going to ask if you can just touch on that briefly, and then maybe as well explain the current strategy based on market volatility, where you're starting at 20% and you can't scale to 100. So the full question is, I do my percentages of buy according to amount I want to invest in that specific stock.
Good.
E.g., 50%, then 30%, then 20%. Is that okay? And I think that's the standard CanSlim approach.
It is the standard CanSlim approach, and it's a great approach. And where is it used? It's used in a good market, and they can talk about confirmed uptrend. This is sloppy stuff. I'll keep it clean. This is sloppy here. The action in the stocks is sloppy. Where can you use this? When the market's acting strong, that's the M, right, in CanSlim. That's the M in Mission Winners, the markets. It's crucial. To control risk, we'll do less. In a good market, and again, this is choppy stuff. Here's the NASDAQ. You're not going to find this in any chart book saying, this is where you go big. It's below the 200-day. So what do we do to control risk? We buy less shares because the action is not as high probability for continuation. There you go. That'll help. Alcoa is still lifting. Some people own it. There we go. Leading group, leading stock. Look at the volume pick up there. They voted. There you go. All right, Paul, we can do another one if you want.
Yes, Pat, what was the reason for the 100% sell alert on MOS? Just trying to understand.
Good question. This was, I forget which day it was. I don't know which day it was, to be honest. In here, I'd have to go back and look. Yes, it lifted today, but the market was sloppy. The market was dropping. I factor into the equation what the market's doing and what the stock's doing. There was no push, and I'll get lighter. I will get lighter. Let me take a look here. Yeah, probably somewhere when it was gapping down in here. And you say, well, it came back. That's
Hey,
we
Pat.
live in the now. I don't know the future, but I do know this. I will control risk just in case. Just in case, because it only takes one or two to really, really wreck an account. And we don't want that to happen. You can say, really? Yeah, really. That'll rattle you. So that's why.
Pat, that sell went out at 159 yesterday.
Okay, good deal. Thank you. Probably you know what it was doing? Here you go. Market was sloppier than you know what. Gaps up, reverses down on a pickup in volume. We're going to get lighter. We didn't have any profit cushioning. We get lighter. That's it. And yeah, it lifted today, but I don't know that. I don't know that at the time. And again, when the market's bad or choppy, I will get lighter. That's just the facts. And it helps us. You know what it does? It protects us psychologically, and it protects us financially, folks. We don't want this. This will mess us up financially, and again, it rattles our cage. So that's why we control them. We can do another one if you want, good buddy.
Okay. I'm sorry. I'm scrolling all over the place trying to catch up with
No,
comments.
you're great, man.
Okay, so
Thank you.
this one is from Ben Boyd on YouTube. How do you buy if it gaps over the pivot? So if you have a stock that you've got a pivot point and it gaps over that, how do you handle that buy? I know you made a bunch of videos on this, but
Great question. Here's what you do. If it's a really big gap up, really big, okay, I'd be really cautious buying. Okay, like I'm something gapping up multiple points. Here's a great strategy, and this is the real world. When you buy and you really want to own it, let's suppose it's on earnings. Wait 10 minutes, okay? Just kind of wait and let it settle down a bit. Watch it. And if you want to buy some, only buy, if you normally start with, we'll say normally you start with 50 shares on your first buy. On your first buy, let's quantify it. Start with 20 or 25 shares. All right? Don't buy a full position on a gap up. Never. Take it a step further. And that controls risk. The next thing you do after you've bought it, watch it on the 10-minute chart. And if it takes out the lows of the day, be very careful and you could sell some. It's really, really important. Most people don't talk about risk control. You've got to talk about risk control. By buying that gap up, we've increased our risk. If it starts to take out the lows of the day, better sell some. I don't like doing that, which is normally why I don't buy the gap ups. There we go. I'll wait. This is working. Good. Okay. That'll really help you. And people say, yeah, but it keeps on going. I can show you 20 where it doesn't, it just keeps on falling and we don't sell. And all of a sudden, we take a huge loss. And this leads to a very important point for everybody that's listening. Please control risk. Never. Bill O'Neill talks about a 7 to 8% loss. He's awesome. Control risk. A clean and simple entry will give you that clean and simple exit for a much smaller loss. And that will help you. It protects us financially, but it also protects us psychologically. And again, I've had grown men call me up crying, just getting chewed up in a stock. I know what it's like. I've been there too. So here we go. Should we do another one, good buddy?
you bet. Okay, this one was from closer to the top of the hour, just so you can frame it on the chart. Tesla has a tail bar now. I always feel that market pulls back when European markets close. I always feel that the market pulls back when European markets close.
Okay. All right.
And I
I'll be
think
honest. I
I
don't have
think
enough data on that to give a really upright answer. I'm not going to lie to you and say, oh, I don't know. I don't know. I haven't seen any research on it or data, studies. Um, so I can't say. And I'm not trying to be evasive. I'm just speaking the truth. Here's Tesla, though, on the day chart. I like how it gapped down and fell. Notice where it stops today, right here. Here, the 21 day. Take it to the hourly. You see, I've already drawn the line. Here's 30-minute. What do I want to see? Take out this line here. What's the negative? It ran up here and it gapped down and dropped the next day or the next bar. Right here, yesterday, it gaps up, it runs up and approaches near that line and closes near the lows. This bar, it runs up, pulls back and closes in the bottom half of its range. It needs to take out these tops. By the way, notice I already have a price alert set. See that? Take out that with volume and a good market. Until that happens, we have the patience and the discipline to wait. We just wait. Has Tesla been good? You tell me. Buys right there. We own that. There you go. That's 500, 400, 500. All right, Paul, I know we're running out of time, so let's try to handle these.
well, I don't know if you care to run over or if you have any time, but Rich has actually given us permission today if we care to.
Yeah, we've
I'll,
had some
I'll keep.
politics. Let's go like another. Let's go to 10:15 Central Standard Time. Is that cool with you?
How about I'll just keep feeding you the questions until you're ready to halt, and then I will make sure that we get all questions over to Twitter that don't get answered.
Sounds like a deal, buddy. Let's rock.
All right, DIS, please.
Symbol one
D
more time.
symbol DIS. Let me just double check to make
Disney?
sure it's right. Yes.
Oh, okay. It's sad when you got all these ticker symbols in your head. Isn't it crazy? I just do. All right, here's Disney. Here's another classic case. That purple line's the 200-day moving average line. Team, you'll dramatically improve your odds if you stay away from stocks below a falling 200-day. Just leave them alone. You say, oh, I might miss something. I'd rather stack the deck in my favor. And quantifiably, stuff over the 200-day has a greater odd of working. It's just a fact. So there's all kinds of sellers up here. I mean, look at this. There's all kinds of sellers up here. And they get a gap up today and they go, I'm so grateful. I'm not down as much as I was. I'm selling into it. Just leave it alone. There's overhead supply, tons of overhead supply. Just leave it alone. All right. Wouldn't buy it here. Just do nothing with it. Okay. Just be cautious. I won't buy stocks below a falling 200-day. That's it. And again, I was there for the crash of 87. So yeah, I know what it's like to see things drop. So anyway, let's do another one, good buddy.
Okay, this is from YouTube, and I hope I don't mispronounce this terribly wrong, but it's Tam Long.
Okay.
Hey, Pat, thanks for sharing your wisdom. Love your channel. Can
Thank
I
you.
ask, is there an alternative stock scanner, preferably a free one like Finviz, and what sort of criteria would you use? And I guess this is an alternative to MarketSmith.
Good. Okay. Yeah, we can do something here. I'll share this with you. Statistically, and again, I taught statistics on a university level years ago, advanced statistics. Here's what you do. And by the way, I wasn't a jerk when I was teaching. Okay, I didn't get any death threats or anything like. Well, no, I got this one. No, I'm teasing. Here's what you do. Focus on stocks that are over $12 a share that are within 20% of 52-week highs, that are preferably above the 50-day moving average line. I hope you're all writing this down. Focus on stocks, because again, this is not MarketSmith, so we have to transpose the data, but you can put this in there. Two separate screens. Focus on stocks that last quarter's earnings were up 40% or higher. All of them are within 20% of 52-week highs. All of them are over $12 a share. All of them trade at least 200,000 shares a day. Screen number one. Screen number two, keep everything the same. Eliminate the earnings and put in there sales last quarter of 40% or higher. All the other variables the same. That works. It works. You say, I might miss something? Stack the deck in our favor. If statistically we know great stocks contain those constraints, then let's use it to our advantage. That's it. You're fishing in a better hole. Here's a great analogy. You got two people fishing. One person's catching 10 fish every 20 minutes. The other person's catching one fish every 20 minutes. Which hole are you going to go fishing in? There you go. And maybe it's a corny analogy, but I think you get the point. All right, Paul, let's do some more.
You bet. Pat, if I can comment on that last question, we have a few people in Discord that have developed Finviz screens to track very close to what you do with MarketSmith.
That's awesome.
Those are available for folks that are on Discord.
That's just great. Thank you, Paul, for sharing. That's the power of a team. This is what's great. It's not a case where somebody's like, I know what to do and I'm not going to tell anybody else. No, it's like a football team. Everybody's trying to push in the right direction, right? The same thing here. That's good.
Absolutely, on Discord. That's what a lot of people are about. Next question, if we can.
Sure.
Okay, this is from Jason D. I know we are not in the business of predicting, but Pat, what do you think is going to happen in the coming months? I know you have your crystal ball there on your desk.
Yeah, you know what? It was weird. It was sitting here and I bumped it and it fell on the floor and it shattered. No, you know what? Look at the spiders. It's just chopping around. There's one plus. It has a higher low. This low is higher than this low, and it is now above the 200-day. I like that. This could be the start of a lift. We'll see what it does. And the best part, again, it's got a higher low. That's a plus. That can normally lead to an advance. Right here, it had a higher low, and this led to, and we taught this. Right here, it bounced off the 50-day. Right here, it had a simple double bottom, and it lifted. You see the point? You see the theme here? Right here, it got creamed, and then it rallied up, and then it fell, and it put in a higher low. This low is higher than this low. And it started to lift, and it did this. There we go. We'll focus on that. It makes it easier. It makes it easier. Here we go. Let's do another one, Pablo.
Okay, this may be more of an observation, but Alcatraz, in regards to buyouts, NVIDIA terminates agreement to buy ARM from SoftBank.
Okay.
I'm sure that has a little bit of an influence.
Yeah, I would think so.
Yeah, but they're doing good.
Yeah, I don't know enough about their, what the constraints were on were they merging, were they buying out? I apologize, I just don't know, and so I don't really have anything to say about it as far as what to do with it. I'm not trying to be evasive. I just don't know. NVIDIA lifted right here. Okay, see that price alert? We want to see this hang up there. And if it doesn't, it'll sell, lock in more profits. That's it.
Well, here's one I know you can answer, Pat.
Yes, sir.
Pat, can you walk us? I'm going to paraphrase this question. It'll be a little bit easier. The question is regarding the first 15-30 minutes of the open. And the question is regards, how do you know if you should go ahead and enter a stock or you should wait until later? So let me just read you the question. Pat, can you walk us through how to decide in the first 15 to 30 minutes if the stock on key list is good entry point now or wait later?
Great question. I love this. If it's a clean and simple base, and most of the stocks on the key list are, it's a clean and simple base, it's breaking out, and we look at the 30-minute and 10-minute chart right near the open. If there's volume surge coming into it, and again, if there's volume surge on the 30, you don't need to look at the 10. It's already on the 30 and you see that volume. You see that volume surge and it's pushing through a clean and simple spot with that volume surge and the market's acting okay. That's a buy. That's simple. That's a buy. Price and volume, talk, and we just listen. It works great. If it's not there, volume, we just don't buy. Also, I pointed it out. The market's acting okay. If the market's sloppy or dropping, we don't buy. People say, oh, you might miss something. Yes, but we're trying to stack from a statistical perspective. We're trying to stack the deck in our favor as best we can. We want a good market. We want a good stock in a good group with a clean and simple base and volumes coming into it. There you go. By the way, what I just shared, boy, I wish somebody would have said that to me years ago. Say, hey, Pat, come on, man. If they had said that to me, I still might have more hair. Okay.
All right, Pat, are we okay on time? Can we take one more?
Yeah. One
Okay.
more and then we'll wrap it up.
You got it. This is from Steve Jost on YouTube. Can you discuss initial stop placement, profit targets, and trailing stop strategies and tactics?
Great question. I do not have profit targets. All right. First off, I'll let it work as long as possible. If I buy something and it starts to stall, and it's starting to stall, say on the 30-minute chart or the hourly chart, and it's extended in price, and the market's sloppy, I may sell off 20% of the shares to guarantee a profit. Here's the beautiful part about that. By selling that 20% off, if the price drops down by my buy price, I will sell the rest for break even and still make money. As far as profits targets are concerned, I want to address this further. I never put on profit targets. I will let it go as long as possible. But we are aware, and you all are too, that stocks have memories, right? Why? Because the charts are just a reflection of human emotions, and humans have memory, all right? And we know that if it's rallying up to an old resistance level, there's potential here. We'll do this one right here. I'll get close to it. There we go. Look at that. Support here on the line, support here on the line, support here on the line, support here on the line. It gaps down and reverses back above it. Loses support. Comes back up to support at the or resistance at the line. Falls. What's it doing now? It's approaching the line. All right. What else is it approaching? It's approaching the 50-day. We'll have to watch that and make sure that that doesn't cause, that doesn't lead to a problem. That's simple. We'll try to manage it as best we can. But remember this. Stocks have memory. The chart is a reflection of human emotions, and humans have memories, and it's reflected in this price action. If you do focus on that clean and simple, folks, you will dramatically increase your investing results. I'm not kidding. I'm going to wrap this up here if I can say one last thing. I'll say it again. Please, and this is something I wish somebody had said to me years ago. Hey, Pat, focus on stocks that are in the top 40 groups. Focus on stocks that last quarter's earnings were up 40% or higher, or last quarter's sales were up 40% or higher. Focus on stocks with a composite rating of 90 or higher. Focus on stocks with an accumulation distribution of A or B. Focus on stocks preferably that are over a rising 50-day. If you combine those variables together, you will dramatically improve your investing results. And then I'll flip that coin and say this. Focus on stocks with clean and simple bases. Prices good above the line and bad below. That way you can keep losses very small. And through years of study, and you'll do this, you will start to see, by Jove, he's right. These stocks just push and they frickin' go. They just go. And it's measured in price and volume action. And if it doesn't show up, it means other people don't see what you see and they aren't acting on it. And that helps us keep the losses very small. Also, I need to say this. No day trading, folks. No 5-minute charts. No scalping. Try to buy right and ride a trend for as long as possible. You see this low right here and this low? This is a higher low setup. This low is higher than this low. And right here, and when it triggered right there on that day, see the volume pickup? VIPs bought it. And it just trended. It just trended. That's great money with no hassle. Focus on stuff like that. And always control risk and always ride trends. I'll say it again. One of the biggest lies on Wall Street is you'll never go broke taking a profit. If you constantly limit your profits and don't limit your losses, you're going to have a problem. And I don't want that for you. I really mean that. I don't want that. I don't want that for anybody. So anyway, Is that a wrap, Paul? Does that sound good?
Yeah, if I could just mention real quick, folks, I will go back through all the questions, and anything that wasn't answered, I will post on Twitter for Pat to look at as the day goes on. So be looking for answers to your questions over there. And I think that's it, Pat.
That's awesome. Hey, folks, thank you all for listening. I hope this helps you. I hope this helps you. I remember once I was in a Sunday school class, and we had a really sharp guy there that went to Oxford, and he was talking, and he says, we talk about things you can steal. You can steal a person's possessions, and I'll never forget, he challenged us. He said, what about this? Can you steal a person's time? The answer is yes. And what I'm doing here, I don't want to steal your time. I want to make it worth your while. So that's where I come from. Thank you all very much. I appreciate your time and questions, good questions. And I thank you.